What you tend to find is that foreign banks do come in and access this market. Liquidity is strong. So the interesting thing about the Australian market is that the returns that are able to be generated are often greater from direct corporate lending than what might be available in some of those banks' home markets. And so often you find, some foreign banks that are attracted to coming to the Australian market because the return and the risk profile is attractive. In Australia, the legal framework is actually very friendly towards lenders, and for us as an investor, that gives us a means to be more confident around the stability of capital of our investors in the loans that we provide. So what you tend to find in market conditions where people are exuberant and things are going well is that the liquidity is strong and pricing becomes weak. People misprice risk. And so from our perspective, because we lend across a very broad spectrum of the Australian economy, we're not pigeonholed or required to lend to any one particular borrower. We can stand out of those transactions. Our interest is our investors' interest, is the risk of making that loan and the return that we're able to generate for our investors acceptable for the risk. I think at the moment you're seeing a good level of liquidity. The market is quite buoyant. Banks have access to capital and they're lending. Companies' demand though for credit is not as great. But in different pockets of the market, there are always access or opportunities that present. And for us, because we're in the market and we're lending to corporates, we're able to take advantage of those opportunities for our clients to drive the right risk and return profile for them.